All right, hey guys, this is the third video. This one is on corn, talking about why we want to re-own. If you haven't watched the big video, the reason that we want to look at re-owning corn here or suggesting that this is a good idea is because of the reversal we had today in conjunction with the analysis we gave you last Thursday. And today we did also close back above our main hedge line. And I want to call attention to the divergence off of this low on the stochastics. I think this is a significant enough position that we might want to work higher. So 50,000 feet, what is the market potentially telling us? It got big bearish news on this day, which is, hey, supplies are growing because we're planting lots of acreage. And if you work that through our balance sheet, then we need to work lower. So the market did that, and now it's reversed. And sometimes when a market does this, it is saying, it is essentially sending a signal saying, for now, we've priced in this supply, and now we need to work higher in order to figure out what our top side is or put some premium in the market to ensure that the supply does exist. So long term, we're still bearish for now, but shorter term, we think that we may need to work a little bit higher. So if you have been hedged and you have a position on from higher levels, this is an opportunity to enhance that by capturing a little bit of upward movement. And I want to give you a couple of ways to do that. Now, to be crystal clear, like wheat, this is not for speculators. This is not speculative advice. This is solely risk management or hedging advice. And the assumption here is that you have a cash sale on the books. You have a portion of your production that is hedged from higher levels or even from lower levels. It doesn't matter. But the assumption is you've got maybe an HTA or a cash contract on somewhere and you'd like to manage it. Well, here's a couple of ways to do that. The first way is for you to call your elevator and ask if you can just exit the futures portion of your hedge. I like that setup because you have a clear point on where you're wrong, which is down here at 550 or 547, which is this corresponding low. We breach either of these two levels, and you want to put that hedge right back on. So you're taking roughly a 13-14 cent risk from today's close to yesterday's low or to this low down here, which makes lots of sense when you're looking, hey, we might rally 40 or 50 cents. So I'm willing to risk 13 to gain, 25, 35, 40 cents. That is a 3-to-1 risk reward, and I'll take that, or a 1-to-3 risk reward, and I'll take that all day long. So that's what we're looking at here. It might not work. You might have to put it right back on, and that's okay. But if you want to capture that upside, that's what you would do if you have an HTA on. Another option, if you don't want to lift the hedge because you think that's too risky, but you want to capture some upside, an option is just to buy a call. You would pick your phone up and call your merchandiser at your elevator or wherever your cash sale is on and say, can I put a 570 call against that HTA? And if he says yes, then what has happened, the way you calculate that now is you take the premium that you paid, let's say it's 30 cents, and let's say that you originally sold at 580, okay? So you take 580 minus 30, your new floor is 550, and which is, by the way, right exactly where where we would have put the hedge on anyway. So it's the same net financial result for you, and you will participate as the market works higher, and we can make adjustments later on. If your elevator says no to both of those options, either buying a call or lifting the futures hedge, you can ask, can I replace my futures hedge or my outright short position with a put? And instead of buying a call or holding futures and holding a long call, you can just exit your futures and buy a put, which puts a floor at this 550 level. It would cost about 20 cents to do that. Again, you can your downside is still protected and your upside is open in that instance. So that's 3 strategies for you. It's very normal. None of that is super wacky. It's simply ways that you can take your current position and potentially enhance it into a rally and look for an opportunity to resell it again from higher levels. And if this starts to work higher and we're get above our cloud and we start to take out some of this upper stuff up here at the $5.80 to $6 range and we get above that, we'll see what the news looks like then to see if we have legs to work ourselves higher. And we're not calling for that, but if something were to happen, then you're already positioned into that, and you're not taking more risk by trying to put a position on at higher levels. That's why I'd rather do it here with all of this conjunction of signals as opposed to wait and do it higher. So that's our thoughts on corn. I hope that's helpful. Again, this is for hedgers only and for people who have sales on the books, and this is not speculative advice. There's different stuff to talk about from a speculator standpoint, so this does not cover that. If you have questions about that, call us. We'd be happy to talk to you about it. All right, we'll talk to you later. See ya.